Hey folks, Jason Dynison with another MyCPE Insights at MyCPE One. I'm an enrolled agent and I teach here at MyCPE One. You can find me in the archives, and every couple of weeks or so, we do this roundup of some tax and accounting news from around the country and around the world. So let's get started. Well, lately there's been a rush on silver and gold. The old school, but really old school, um, valuable metals. With government shutdowns, tariffs, uncertainty, gold and silver are starting to be attractive to investors. Gold prices have gone up more than 50%. Silver prices have gone up 70%. Now, some of that's not just investors. I mean, these things do get used actually in industry, like silver for solar panels, electric vehicles, electronics, and such, but also for investment purposes. Gold is now up to $4,200 an ounce. And if we look at the chart here in the last year, it was down around 2,500 just a year ago. Now it's over 4,000. Gold and silver, something that's not going to ever go out of fashion. It's for as long as people have known about gold. It's something that people have wanted. There's even some central banks that are buying gold. The U.S. Treasury holds millions of ounces of gold. So, as the article says, gold is the granddaddy of safe havens. Will it cross the $5,000 mark? Well, it might. It's on its way to that. Silver is also shooting up over 70%. Silver has, as we said, some industrial uses as well. Electric vehicles, solar panels, smartphone circuits, and such. So not only is it something that investors want, it's something that is used in industry as well. There's also a supply that is, or it's the other way around. Demand is greater than supply and has been for the last 7 years, which means that the price of silver goes up, up, up. So, there's even a Mark Twain quote in this article. Buy gold, they're not printing any more of it. Let's move now to kind of a somewhat related topic, crypto. And in this case, it's a crypto scam. So this is in Cambodia, where federal authorities seized over 127,000 bitcoins. Now, as we record this, Bitcoin has gone up and down over the last month or so, but it's still over 100,000 per Bitcoin. So that means all these Bitcoins that were seized are worth around $15 billion in a crypto scam organized by this guy who was chairman of Cambodia's Prince Holding Group. And so this was a fraud scheme that had elements of social engineering, romance scam, and high yield investment traps. So in Cambodia, they're trafficked people held against their will, forced to act as fraudsters, posing as financial advisors or even romantic partners to victims around the globe, especially though people in the United States, people with money. And once relationships were formed, the victims were led to believe they were making an investment, either with an investment advisor or sending money to a romantic partner who cared about them. And of course, this was all a big scam. Investigators say this operation yielded upwards of $30 million a day, 76,000 fake accounts that were managed by these basically hostages doing this stuff against their will. And so there was a global investigation, and the United States was a part of this along with other countries. And crypto was involved, so there was blockchain forensics involved in this. And eventually, this fraudulent operation, it's more than just scamming people out of their money. It's also, you had people being held hostage, held against their will, doing this stuff. So this guy, he has a lot of problems now that he has been arrested. $15 billion in this scam. Well, Netflix is having some tax problems, a tax dispute, not with the United States. This is in Brazil. And so it's led to a much larger than expected tax charge of $619 million on their latest quarterly report. There's already concerns about growth sustainability going into 2026. And now there's this hit with Brazil. So their stock, Netflix's stock, has dropped by quite a bit in recent times. Their operating income dropped by over $3 billion in the latest quarter, about 400 million short of expectations. And, things just are not quite going as well as they would like with earnings per share and such for the investors. And then Brazil comes along, and basically there is a Supreme Court ruling in Brazil that ruled that this particular tax applied to Netflix too, to the tune of $619 million. The CFO of Netflix says that this is a one-time provision, not specific to Netflix, which means other tech and media companies doing business in Brazil might get dinged by this as well. Certainly, though, it's something that hurts the earnings of Netflix. And, there was a 360% increase. That's a massive increase in the value of the stock over 3 years. So will that cause their stock to come tumbling down? Maybe, maybe not. But the growth might slow down, not just because, though, of this tax hit, but just overall. At some point, that run has to end. Various analysts say that it could be concerning, this $619 million tax hit, but also Netflix has stopped reporting subscriber numbers. So analysts aren't quite sure how to measure the financials at Netflix right now anyway. Doorstep taxes are starting to become a thing with state revenue departments. So Minnesota did this recently. I think that they enacted theirs maybe last year. Colorado has gotten in on it. Other states are thinking about it, what are called doorstep taxes, which is basically a delivery charge that the state assesses on things like DoorDash or Amazon. You get hit with a fee from the state, and it's not a sales tax, though. It's a separate specific charge. So, for example, Colorado actually was the first. I was wrong on that. It wasn't Minnesota. It was Colorado first and then Minnesota. 28 cents per delivery in Colorado, 50 cents in Minnesota on any delivery over $100. And you have New York, Hawaii, Maryland, and Mississippi kicking this idea around. Colorado says they'll get around $5 billion in revenue from this over the next decade. And these delivery fees, they're taxes assessed by the state that are supposed to go into like the road fund. Now, obviously, not everybody likes these. I mean, 28 cents, 50 cents doesn't sound like a lot, but it adds up. And it's not just states, there are localities that assess fees too. Governments call them fees, economists say it's rent seeking. But whatever you call them, they're there. And even some of the corporations or airports are getting involved too, adding their own fees to things. So the idea is that this is supposed to, like I say, fund the road maintenance and such. Some economists say these are stealth taxes that are short-term fixes that might plug a budget gap, but at the cost of long-term trust and consumer confidence. Also, Amazon and DoorDash have been arguing against these taxes and pushing back on them, but lawmakers continue to push for these things because people like their convenience factor. So it's doubtful if you add 50 cents to something, people might not notice it. And so every day they order their DoorDash or they get their Amazon deliveries, and those 50-cent increments certainly add up over time. Well, we hear a lot about private equity these days. What are some things in the big, beautiful bill that affect private equity? Well, one is the interest deduction, the limitations on larger companies on how much they can deduct in interest expense in any one year. So the big, beautiful bill makes that limitation permanent, but it also changed the formula for when it kicks in to allow you to include depreciation and amortization, which is good. That means that you're not as likely to be subject to this because you can take depreciation and amortization into account now, which means you can take it into account when figuring this limitation, which means more interest will be deductible, which means lower taxable income. Bonus depreciation is back. That's good for everybody with business ventures. Property acquired after January 20th of 2025 or on or after. The law is after January 19th. So Inauguration Day of the new administration is the key date here. You get 100% bonus depreciation. Before that, if you purchase something on, say, January 15th, you're stuck with what the prior rules were for 2025 before the big, beautiful bill, which would be 40% bonus depreciation. You have the research and development credit, which has been changed. The amortization rules have been changed to where now you can deduct your research and development expenses retroactively even. It takes effect for 2022 retroactively. If it's US-based research and development, foreign-based R&D still has to be capitalized. The definition of qualified small business stock, the definition of it wasn't changed, but some of the provisions have been changed. The asset threshold is now 75 million and the cap has been raised to 15 million. Plus the holding periods scale and start at a 50% exclusion after 3 years and go to 100% after 5 years. Well, there's this thing that hasn't gotten as much attention as the big, beautiful bill, but it's called the Math Act, the IRS Math and Taxpayer Help Act, passed by Congress. So, a lot of times, bills that are passed will contain provisions saying, just for example, this tax credit, you have to have a social security number. And the IRS can treat it as a math error and just outright disallow the credit if you don't have a social security number, or you don't put it on the return, or if basically there's anything where the IRS says, hey, your paperwork isn't in order. We don't think you qualify. It's treated as a math error, which means they can just simply deny it. It's not an audit, they just deny it. And that led to a lot of confusion on this stuff because, as we're told in the article, in this situation, with math errors, you get this letter from the IRS denying, and you only have 60 days to contest before the tax court. Otherwise, you would have to pay any tax owed in full and then go through like the regular court system and all of those costs. And taxpayers were not specifically told in these notices what issue applies. Like, why specifically was this denied? Because it would say things like your recovery rebate credit was changed because a Social Security was missing, your AGI was too high, or maybe the amount was miscalculated. That's literally what it would say. You didn't even know what was wrong. And so the Math Act requires the IRS basically to be clearer on what these math errors are. Like, why was this credit denied? And then just in closing, we like to try to end these on a little lighter note. Leadership lessons from the movie Office Space. It's hard to believe that Office Space came out in the late 90s. I remember it. I still think of that movie. I was thinking just the other day, actually, before I even saw this article, I was thinking about the "Have you seen my stapler" guy. So this is one of those classics. And this article just talks about, you know, um, the micromanagement, the indecision, the lack of empathy, the meaningless reports, things like that. You know, bad culture. What are you doing at your firm to make things better for your employees rather than the ridiculousness that we saw in Office Space, and the consultants, the two Bobs brought in to analyze things. And what are you analyzing? Who's doing the analyzing and what happens with that? Well, that'll do it for this episode of MyCPE Insights. Thanks so much for joining us, and we'll talk to you again soon.